Good morning, ladies and gentlemen. It's a real pleasure to be here in Brisbane, even if it's only virtually. It's been a long time in Western Australia before we've been able to travel. So I'm looking forward to actually seeing some of you in person later on this year. So thanks in particular to the organisers. It's difficult nowadays to find an event where you can tell your story, and very much appreciate the fact that this event has come back to life. So I notice that most of the presenters here today and tomorrow are in the mining business. Now, there's only a couple of us in the oil business, and I'd like to just share with you why we think the oil business is still a good investment and will be a very good investment going forward. The first thing you see on this slide is the Brent crude oil price. Now, obviously, it's shot up recently due to global political events, but it's been generally on an upward trend this year. And what we're seeing is that on the supply side, there's been very little investment in the industry in exploration and new developments for many years. And that's started to crimp supply, and even OPEC's having trouble increasing their supply to meet demand. On the demand side, that's been pretty steady and in fact increasing somewhat. On the oil side, we're still doing close to 100 million barrels of oil consumption a day. It's 100 million barrels a day. That's a lot of oil. And you can put that in perspective and look at what's been discovered recently in Australia, and we'd suck all that dry in a couple of days. The gas side's been very strong as well. And most of the forecasts show that there's not a lot of demand destruction from renewables going forward. There's both the gas side and the oil side predicted by 2040 under most scenarios to still have very strong demand for them. Of course, coal is where the demand growth is being destroyed, and a lot of that is being replaced by renewables for power generation. So where does that put Buru Energy, our company? When I first look at a company that's brought to me for investment, first thing I do is have a look at it corporately before I even start to look at the assets. There's a couple of things that stand out for me. First of all, what's the market capitalisation and what's the liquidity? Our market cap's about 100 million, close enough, and we have quite strong liquidity. There's millions of shares a day traded. We have cash on hand as of the end of the year of about 23 million, and we also generate cash from our oil field operations. The other thing I look at is the directors. We have 4 directors. I'm the executive chairman, and particularly in companies our size, what we want to do is make sure that there's experience on the board that is basically has the right experience to be able to drive the company forward. And apart from myself, who's been in the industry a very long time, the 3 directors are very experienced oil and gas people. So what do? Buru has oil production in the Canning Basin and a gas business with very large resources. And we've also just made a very significant gas discovery on our acreage in the Canning Basin. We're also using our oil and gas skills to leverage ourselves into energy transition activity. Now, we've been very clear that we don't want to just go and do stuff that we're not, don't have the skill set to provide. And that includes, we're not going to go out there and build a solar farm just for the sake of it and hope that we get a PPA. We're using our oil and gas expertise to leverage our skill set to try and add value through the energy transition. There's 3 aspects that we're working on: natural hydrogen, carbon capture and storage, and energy minerals that found on our acreage in our petroleum areas. So where do we operate? We're up in the onshore Canning Basin and the onshore Carnarvon Basin. We haven't gone offshore. The costs and the risks are too high for a company of our size, but we've brought a great deal of expertise to our operations in the Canning and now in the Carnarvon. We're an operator, so we have a very strong skill set to be able to deliver operations for people. And we operate for three major companies: Origin Energy, who you'll be familiar with from Queensland in particular, for Rock Oil, which are a subsidiary of a major Chinese company, and Mineral Resources, or MinRes, who are our joint venture partner in the Carnarvon Basin. They're a major iron ore and lithium producer. So we stick to our knitting. We're a very experienced onshore operator and a very capable onshore operator with a large swath of exploration and production acreage. What do those assets look like? Here's the Ungani oil field. It's a relatively simple conventional oil field. It's been on production for a number of years now. We operate it. We have 50%. Rock Oil have the other 50%. We currently produce 600 to 650 barrels of oil a day, which at current Brent prices is very profitable indeed. The oil quality is very good, and we sell it for a premium to Brent. We have a very stable and secure export system through Wyndham. The oil is trucked to storage tanks in Wyndham, picked up by a ship, and taken to Southeast Asian refineries where it's very well sought after. The really exciting thing about Ungani is that there's a potential to drill another well on an undrained part of the field, and given the strength of the oil price at the moment, we're very keen to get that done and up our production and hence our profits. So we're looking to try and drill that in the third quarter this year. The other really exciting thing that we've been able to do in this last year's drilling program, we had a very strong drilling program in this last year. We've made a conventional gas discovery, and it looks like it could be very significant. It's called Rafael, and it's drilled in a very large structure, has 3 producing zones. We've only been able to test the bottom half of the bottom zone, so there's plenty of potential left in the well, and the gas quality in particular is excellent. Very low CO2, which has obvious benefits from an emissions point of view, and very high levels of condensate, which is a light oil, which is almost like diesel or jet fuel. That adds a great deal of value to the gas. There's also high levels of ethane in it. So we're in a testing program for that with our partner, Origin Energy, and we're looking to come back to that well in the third quarter and finish our testing program. Most importantly, there's also a independent experts contingent resource report, which we expect to see in the first week in April. And that'll give us a solid grounding for further appraisal work and also for the commercialisation of the gas resource. So we're very excited about Rafael, and I think we've got a long way to go and very significant resource sitting there. I'd now like to move on to our energy transition activities. As I mentioned, what we're trying to do here is apply our oil and gas expertise to the energy transition space. The first thing that we're doing is looking for natural hydrogen, which is called gold hydrogen or white hydrogen. This is hydrogen that's produced from underground geological reservoirs. So it's not manufactured like virtually every other form of hydrogen, but it is reservoired in the ground. The first area that we've embarked on a search for this using standard oil and gas techniques is in South Australia, where we have a very large acreage position. I hasten to add, these are applications and we're working through to get them granted. But it's an area where natural hydrogen in high concentrations has been produced from legacy wells, and we're able to follow that geology up into the areas where we've made our applications. Now, it's very early days for this type of activity, but our strong feeling is that there's an opportunity here for the production of hydrogen at low cost and in significant quantities. Moving on then to what we're doing in carbon capture and storage, which is what we call our project GeoVault. Any credible path to net zero in 2030 or 2040 involves carbon capture and storage. And you may have seen that Santos in particular is currently embarking on a major project of carbon capture and storage in the Cooper Basin. You can see from the diagram on the top that the size of the projects that need to be put in place to make this work several orders of magnitude greater than what we're currently doing at the moment. We've really focused more on making sure that we can have the lowest emissions possible in any projects that we start, particularly in our Rafael discovery. If we're commercialising that, we'd like to be in a position where we're able to reduce our carbon footprint as far as possible. So we're putting a lot of work into understanding carbon capture and storage and developing the in-house expertise to be able to apply that to geological storage of CO2. The other energy transition activity we're doing is called Project Batmin, obviously battery minerals. There is a long history of mining for lead and zinc in the Canning Basin. These are Mississippi Valley type deposits, and we have seen quite substantial lead and zinc in the petroleum wells that we've been drilling. So we looked at where that geological concept might take us on our petroleum leases, and identified an area on the opposite side of the basin to where the existing legacy mines are, and have done a joint venture with the mining company Sepa Resources, and identified a number of very interesting looking targets along that trend, and we'll be drilling those in the third quarter. This is a very exciting project for us because we've been able to take our oil and gas expertise and apply it directly to mineral exploration. So, ladies and gentlemen, in a nutshell, that's Buru. Very strong core business and working hard on integrating the energy transition into our business. Thank you again for the organisers, and thank you for your time.